This week, we are discussing Bitcoin for boomers, how you can use cryptocurrency in your retirement plan, and a quick reminder that CoinDesk is a news organization and this is not financial advice. I am joined today with Tyrone Ross, CEO of Onramp Invest. Welcome to the show, brother.
Thank you so much for having me. I got my cocoa butter lathered on. I'm ready to roll. Let's rock.
Likewise, brother, me too. So let's jump right into it. First, tell us a little bit about Onramp Invest and some of the services that you offer in the crypto industry.
Yeah, appreciate that. So Onramp is building the technology to allow financial advisors to build portfolios with Bitcoin and other crypto assets for their clients. And, right in line with this conversation, what we want to allow advisors to do, if a client was to walk in and actually tell the advisor, hey, I want to add a 5% allocation to my portfolio, give the advisor the tools and the technology to do that. And we also have Onramp Academy, which is a place where advisors can go and get educated on all things crypto.
Oh, yeah, absolutely. And you need both sides of that, right? You need the education portion as much as you need the actual allocation so people know what they're actually investing in, right? So, Bitcoin and cryptocurrency is usually seen as, a young person's game. All the statistics point towards younger people using it, younger people buying it. But why is it important for the older generation, our boomers, some of the people closer to retirement? Why is it important for them to learn about crypto as well?
So you have this narrative now that Bitcoin is digital gold, if you will, right? And it's hard to tell a boomer, oh, we're going to rotate out of this internet money and go into this internet money, where if you create a narrative around Bitcoin being similar to gold and some of the reasons, boomers would hold gold, an inflation hedge, store value, so on and so forth, you can go that route with exchanging that with Bitcoin. Also, low rate environment, bonds aren't doing much. You look at the lift that Bitcoin can add to a portfolio. If I'm 55 and my financial plan says I'm going to live another 30, 40 years, you may start to look at Bitcoin for some of that capital appreciation, which you need in a portfolio.
Right. And that points to the savings part of Bitcoin. It long term as a savings account or as a store of value, much like gold, is a great way for boomers to sort of get it in their mind what Bitcoin is used for. But real quick, I want to play a recent clip from Gary Gensler, head of the SEC, talking about how the younger generation could save for retirement.
What I want to talk about is savings. Start saving early and save often. I know it sounds a little odd. You're still in college, but just for a moment, if you were to save $5 a week and you earned maybe 8%, starting off while you're at college, you may have $130,000 plus saved by the time of retirement at 65.
So, Tyrone, I want to get your reaction to that. What do you think as far as Gary Gensler's plan of saving $5 a week? Do you think this is a good plan, or do you think he is sort of ignoring the best savings vehicle there is?
Mr. Gensler thinks it's 1995. I get it, but compounding interest and the rule of 72, we get all of that, but it's a new world, Gary, right? It's hard to tell, millennials that and Gen X, right? It's hard to tell those folks you get 8% when they can get, 20%, they get, 50% on some things. So that's a tough pitch to this new audience, but I get it, right? He's pitching savings and they're trying to move folks away from all of this software and code that is changing the world. But yeah, man, it's not 1921, it's 2021.
Exactly. Yeah. And I think that his message is something that is safe. It's very conservative. It doesn't really rock the boat. But as soon as you bring up the fact that Bitcoin's compound annual growth is 200%, it kind of gets rid of the whole argument of 8%. What is that? So for younger people, I can see.
Again, the principles of it make sense, right? To save and do all that other stuff. But yeah, take that $5 a day and put it into Bitcoin, right? But I get what they're trying to do there, and the SEC is investor protections and do it the right way. But it's a new world, right? And those returns and that way of doing it it's not going to fly anymore.
Oh, yeah, absolutely. And do you think that, this saving strategy is feasible for the younger generation, but in crypto instead. Do you think they could do something similar, maybe $5 a week in crypto or something similar? Do you think that's feasible for the younger generation?
Yeah, you and I both know that is absolutely possible. There's a lot of retail apps out there that make that possible. I have clients that have done it and have seen their gains and their crypto portfolios explode. Sure. Is it for everyone? No. Is it for select few? Absolutely. And the tools are there to be able to do it, to make it very simple, whether it's a Cash App or Swan Bitcoin or whatever it is that you want to use, dollar cost averaging, taking a little bit of your earnings, putting that into Bitcoin is prudent, right? If you have a long-term time horizon, which if you're 20, 30, 40, you do, if you understand the technology, if you're a digital native and you got a phone in your pocket, right? Why would you do that as opposed to walking in the Bank of America, dealing with bad customer service, them cost, it's costing you whatever, and having to go through a labyrinth of paperwork? Just, again, new world.
Oh, yeah. I always say one day our kids are going to laugh at us for walking into banks with a paper check to ask for our own money.
That's crazy. I feel goofy now walking to the ATM still. I'm like, why am I doing this? Yeah. Like, I don't do it often, but when I do, I'm like, why am I going to the ATM? This is crazy.
Oh, man. Yeah, it's a new day. And definitely the digital era is upon us. And, one of the things about the digital era is that it seems scary for some of the older generation, because if they're just getting used to phones and the internet and Wi-Fi, and then you throw on the fact that, now we have digital money, it can be a little scary. But I wanted to ask you, when you speak to people who are older, who are in the boomer generation, what are some of the concerns they have about investing in something like Bitcoin or cryptocurrencies in general?
No intrinsic value, right? You've heard these, right? No intrinsic value. It's volatile, right? They can print more, right? They can make more. It's 21 million, but anyone could just run this stuff and make more, right? And lastly is the security, right? How do I store it? How do I keep it? How do I use it? So valid concerns, perhaps, right? And yes to some of those, but what you realize is how that generation came to accumulate their wealth is different. How the millennials have, accumulating their wealth. So it's just, my parents, and again, I'm a bad proxy. I grew up in a home that was unbanked and we didn't have accounts and all that, but my mother still goes and uses money orders, like to this day, because that's all she knows. So she won't even use the bank. She still uses money orders. Now I did get her to download Cash App though. So, but imagine trying to get those folks to use Bitcoin, right? Or use Casa or something like that. It's a long way off, but I think those concerns are, what they see as being issues, and that we need to address those of us that have the platform to get them to understand it's easier than you think.
Oh, yeah. And let's break down some of those problems that you said, some of those concerns. Like you first said, no intrinsic value. Could you tell us a little bit about why Bitcoin and cryptocurrencies do have intrinsic value? And then we'll move on to some of the other concerns to try and break those down for our viewers so they can see, hey, it's not as bad as you think. So why does Bitcoin have intrinsic value? Why should someone own it?
Right. So this is the thing with that, no intrinsic value. And it's funny, like you could say that with so many traditional assets as well, but it's just they hang on to this, no discounted cash flows. At least if I buy McDonald's, I know there's going to be a stream of income. So the intrinsic value part, that value comes from the network, looking at the number of users, looking at the accessibility of it and all, its reach and scope globally, the amount of money that it settles, all of these different metrics, right? Our chief innovation officer, shout to Keen Sawyer, said, on-chain analytics are the new 13F. And it's the truth. If you look at an auditable blockchain that you can look at what's going on, all of the information, all of the data is there. You have to take off that old lens to look at a new asset class that has to be gauged in a different manner, right? And network effects and Metcalfe's law and all these different things. So yes, there's value there. You just have to use different metrics in order to attain it.
Absolutely. And I want to jump into the second one. You said volatility. I hear this all the time. I don't think I've talked to a person older than myself who hasn't mentioned volatility when you bring up Bitcoin. So can we sort of debunk that, the volatility of Bitcoin? Is it too volatile, or is the volatility actually good?
So again, I think that's, if you're a trader, volatility is good. If you are young and understand that it's a young asset class and it's less volatile than it was at $300, Absolutely. Now, financial advisors talk about the volatility, and I tell advisors all the time, is it too volatile for you or too volatile for the client? Right? And you got to ask the client that. That's not your decision. If it's too volatile for you, so be it. And then advisors go, well, I don't want to allocate 2% for it to be 110% of the headaches that I deal with. Well, if you profile your client right, my clients never complained about it being down 30, 40%. When I was at Merrill Lynch and the stock market was down 5%, the phone would ring off the hook. And I just did a podcast with Josh Brown and JC Peretz and all that. We were talking about, time adjusted, right? How crypto markets are open every day, all day. And if you look at the compressed, amount of time that stocks trade, small caps, micro cap stocks, you put them side by side, it's easy to see the volatility. And Bitcoin isn't what everyone makes it out to be. Is it more volatile? Sure. But for right now, again, it's 13 years old. What isn't volatile at 13? Right? It will become less volatile. But right now, look at that as an opportunity as opposed to an excuse not to get in.